Tim Holland, Chief Investment Officer at Orion. What do the latest indicators suggest about the economic conditions in the country?
At the risk of not being very declarative, Chris, things seem okay. The soft data is more bad than good, sort of sentiment surveys, though we did have a big jump in consumer confidence in May per the Conference Board. The labor market, that's the big thing I think is hung in there, though there's an increase in job openings and folks are telling us that it's getting harder to find a job. Consumers hung in there. And even though this is a backward-looking data point, Q1 earnings for the S&P 500 were fantastic. Industrial data is mixed. So again, it's a little bit of good and bad. And so I think it's really hard to know if the economy is going to inflect up or down from here. If I had to kind of weigh it all, I think things are okay. And obviously, additional clarity around trade, around fiscal policy would be helpful. And as we think about DC, the administration, Republicans in Congress are trying to get that tax bill passed, and I think that could provide, if they get there, a decent boost to animal spirits.
Based on current conditions, how, if at all, do you see the Federal Reserve adjusting interest rates and why or why not?
The Fed is famously a data-dependent institution, maybe more so right now than at most points in time. Chairman Powell has talked about tariffs, proposed or potential tariffs, the threat of tariffs causing a spike in prices, which would present an upside risk to inflation. But at the same time, back to the jobs market, there are signs that the labor market has softened, but it's still doing okay. And so I don't think the Fed is all that worried about the economy right now. They're a little bit more worried about inflation. And so as I think you put it all together, I think they're going to sit on their hands for this month's meeting, probably the next meeting. The risk is that they're too late if the economy softens, but they don't want to be too early in case you do get that tariff-driven spike in prices, which admittedly hasn't shown up yet. So I think as it concerns the Fed, it's very much a wait and see dynamic for the time being.
How, if at all, do you see current economic conditions impacting U.S. presidential administration policies and why or why not?
I do think, even though I think Donald Trump, President Trump said not that long ago, he's not that focused on the stock market, which was a pivot, I think, relative to his first term. It does seem to us that the administration is sensitive to risk assets, equity prices, and how markets are performing. And so if you think about trade and tariffs the last couple of months, it seems like, at least as it concerns trade and potential tariffs or increases to propose tariffs, that the administration has pressed its case a little bit after markets have done well and pulled back after markets have stumbled. So I do think they are sensitive. There's some sensitivity to risk assets. That said, I'm not sure if overall economic conditions are a big driver of the administration's policies. I think the big priority, which we just talked about, is the administration's tax agenda. And so you've got Speaker Johnson, you have Majority Leader Thune, the Republicans in Congress trying to reconcile those two different bills between the House and the Senate. And I think they're trying to get something done by July 4th. If they can get that done, and I think they will, I think they need to get it done. They have to show they can govern. I think then the focus the rest of the year really does become around ironing out proposed trade deals and dealing with tariffs at a high level. And if you do those two things, if you kind of address fiscal policy and you do solve for some of these trade issues, you have the agreement with the UK. We're talking to China right now. You do those two things, and they're pretty big things. I think the economy is in a decent spot heading into year end. And then before we know it, it'll be the end of the year, and we'll be talking about the 2026 midterms.
Tim, thank you for your time.
Thanks, Chris.